This conference will now be recorded.
Just a minute, guys. Just I'm assigning my window here. Okay, let's get started. So, guys, thank you so much for joining with me for this wonderful webinar session. So, before going to the webinar and we'll discuss, I'm just disclosing the disclaimer as per the SEBI rules. So, I'm just providing the webinar content for the educational purposes only. So, all the methods, the charts which is shown in the webinar is only for demonstrate the concepts in the stock market. So, you can still consult your financial advisor before investing or trading into the stock market. And if you are making any decision, you can consult with your financial decision. So neither me or any of my team members is not registered with SEBI or any other regulating bodies in India. So these are some disclaimer I want to give you before we start the session. So guys, you can mute yourself. So if you have any queries or questions, you can unmute it at any time. You can raise your hand so that we can have a discussion. So I'm just muting you all. If you want mic access, just give me a chat so that I can open the mic for you. Okay. Okay, let's start the webinar. So today's webinar concept is BOF Trade Setup. So BOF Trade stands for Breakout Failure Trade Setup. So this is one of the main trade setup I'm using for day in day out for trading mostly in indices. It will also works in all the stocks, futures, options, and indices, whatever the asset class which you are mentioned, it will definitely work there. So we can start demonstrating the BOF Trade Setup and we can see how we can benefit mutually. I think someone of you not hearing my voice. Okay, perfect. So I'll give you some quick introduction about me. You can call me a simple trader, or you can shortly call me a ST. So I'm coming from the IT background. I finished my engineering in computer science. So I work with various IT companies in India, and I've been in Gulf for quite a long time, and I work with various government entities in Gulf region. I started my trading right from 2015 as a part-time trader. So currently, I'm doing trading as a full-time. Um, I trade mostly in Indian market in Nifty and Bank Nifty. From international market, I have knowledge and exposure in the DFM markets. So this is all about me, and I don't want to give much about myself, and I want to give more details on the setups and how things work. So that is more essential than me. So guys, the motto of this webinar is to want to share a simple trade setup with you all, and I want to make you to earn money consistently from the market. That is a key concept of this webinar, and that is my key motto here. And to attain to earn a consistent money from the market, we need to understand the reality between the visible and the intelligible realm. So that is the main thing I want to address here in this webinar. And I also want to take a trading decision independently without without depending on other things, all right? Like you don't want to depend on the news channel, or you don't want to depend on any other WhatsApp calls or trading Telegram calls or Twitter things or whatever it is. So I want you to open up the chart in the morning, and I want you to take the decision independently without depending on other steps. So that is what the important thing. And the important thing is I want you to understand how the other traders are making a decision, and based on that, how we can utilize those decisions to our trade setup. So that is the important thing I want to share with you guys. So you can see this is the motto of this webinar, and by end of this webinar, you can definitely understand these four concepts very clearly, and this will help you out for your throughout your trading career, right? So to going forward, so as I said, just a minute. So as I said, I want you to trade independently without depending on others. For that, what you need is you want a single trading setup. Then you can open your chart and you can see the setup. Setup is forming or setup is coming. You can make the trading decision based on that. So before going to there, I want you to understand the reality between the visible and the intelligible realm. That is the most important thing of this webinar. You can when the webinar progress, you can understand the importance of that. So the motto of this webinar is to share the simple setup. I want to go from the bottom. So we'll go by from the last point from where to you. I'll just show you the difference between the visible and intelligible realm. So for that, to showcase that difference, I just want to introduce one of the famous personality. I hope most of you heard about Plato. He was the great philosopher who lived 400 years before the Christ born. So he states that in the discovering of the true knowledge, the human mind moves through the four different phases. So you can understand why I'm bringing the philosophy class into the trading session by end of this webinar. I think this is one of the most important key thing I just want to share with you guys. So to 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 split these things, the Plato has come up with the analogy called it analogy of divided line. So what he did is he actually draw a line between A to E. I mean, he just split a straight line into two, and again he makes these two straight line into again two pieces. So what he all did is, so he just divided these line into the four different part: A to B, B to C, C to D, and D to E. So these are the four different knowledge phase that Plato has stated here. So let's look at what are the four knowledge states, and let's move further from there. So Plato states images is the first stage of discovering the true knowledge, and things are the second stage, and object is the third, and the form is the final and highest form of the true knowledge the mankind have. So in this phase, lowest is an image space and highest is a perfect intelligent space. So by end of next 2-3 slides, you can understand where we are currently standing and where do we want to actually go. I want every one of us to be in this area. I want every one of us to go to the perfect intelligent, the highest form of the true intelligence and the humankind knowledge can have. So before going there, we just want to understand where we are currently seeing, so that we can without knowing the origin of location, we don't know how to reach the destination, right? So let's understand where we are now. So for in these four true knowledge, Plato has divided these two into the two different things. The first two is divided into visible realm, and the last two is divided into intelligible realm. So these are the two different area where Plata was started. So let's find out where we are currently sharing, and I'll give you a little explanation and also the example. Okay, so this is analogy of a divider line is it's a quite complicated subject. I hope I just want you you go to Google and check out the wide range of papers and all the things you can have available for this divider line. But for your understanding and for the sake of time, I just put everything in the single line to make our life better. So as I told, he splits the knowledge into the 4 different part, 8 images to the forms. So images is the state where the mind can guess on just observing the things. Give you the very quick example I'll give the example in the trading session. I mean, if you open up a chart and if you are seeing some candles, like if you're seeing some 2-3 candles or bull candle, you can your mind is saying that okay, you're seeing the some of bull green candles and the market is going up. So that is like your mind is guessing just by seeing the things. So this is the lowest form of the knowledge the man can have or a human can have. Moving to the next phase, it's called the things. This is like mind makes a probable prediction observing the things. Like this is the mental state of just believing. So for give you the example, if you're seeing some news channel or if you are seeing some tips or in the WhatsApp calls or somewhere, you are believing that news, or you are believing that the tips and calls, and you are taking a decision based on that belief. So that is the state where the humankind have. It's called a things. So these 2 images and things, beliefs, are the low and lowest form of the knowledge the human can have. So when we are moving to the visible realm to the intelligible realm, the first phase or the first thing of the intelligible realm is the thinking part. So this is where the states the mind assumes the hypothesis of the objects. So for this thing, I'll give you some examples so that you can understand very clearly. So in this state, so our mind can think instead of just believing. So for example, so if you are seeing some chart patterns, for example, if you are seeing some ascending triangle or descending triangle, or if you are seeing some double top, triple top pattern, what your mind makes guessing is, I mean, what your mind is going to do is it will predict, or it will try to go for the final conclusion of, okay, this market is forming a double top, and I hope this will not continue and this will going down. So this is some of the calculation. It is not believing, or this is not seeing some images and taking a decision. So this is something the mind will do some mathematical analytics or whatever it can do, but it will make some final conclusion once after seeing some hypothesis of the objects. So this is the first stage of intelligible realm. And the last and the final stage of the intelligible realm, or the true knowledge, is called a forms. So this is where the mind is investigating the things and take the decision based upon the investigation. So this is the final and the highest level of the true knowledge where the human can have. I'll give you an example so that you can understand. So this is for this final stage of the knowledge, your mind will investigate what makes the prices moving up or down. So what made this price is going up or going sideways. So it will investigate the process. So based on that thing, it will come to the conclusion. It will take a decision. So this is what the final stage of the knowledge, where I want every one of us to move. So most of us, I know we are somewhere in maybe our things, or I mean second part or third part, and I want everyone to move to the last stage. So that is the true state of understanding the reality. Okay, guys, if you have any doubts or any questions, you can just write here, or you can unmute yourself and you can speak. And I want this session to be a very interactive, and I don't want this to be a seminar class or like a preaching. Yes, do you have any questions? Yes, can someone talk?
No questions.
Okay, perfect. Let's get moving. Okay, so let's go to our session topic, and we'll start discussing about the market, and we'll start discussing about our setups. So before going to those areas, I just want you to understand. I just want to ask the question. So what do you think about the market? What is a market? If I ask this question out of, I mean, for 10 people, 8 out of 10 people will come up and say that, boss, market is just a price movement, right? So the price is going up, or prices is going down, or prices stay for some time. It maybe they say it is in a sideways, or they say that is in a range bound. So they will give some different name, and they say the ultimate answer I'm getting is um, the price movement is a market, right? Uh, so if you have this kind of understanding about the market, I hope I strongly believe that you are trading the chart patterns, or you are trading the market by using indicators, like any of the indicators. But you are using some, but you are getting some buy signal or sell signal. You blindly go and hit the button. So most of us are doing this. I know that. I mean, I don't want get retail traders to do these things, because I want everyone to move to the last stage of the knowledge, where the final true knowledge is occurred. So as I said, if you are trading based on the price movement, as per the Plato analogy, we are trading the shadows, not the reality, right? Because we are thinking the price movement is a reality, but I'm saying price movement is not a reality. Price movement is a shadow. So you may ask, okay, price movement it's not a reality. What is the reality? So that's the next question, right? Yeah. So what is the reality? I'll come up there. So the reality is the traders making the trading decision. That decision will send the order flows to the exchanges. That order flow creates the movements. That is a price movement, right? Okay. I hope some of you not understand. If you're seeing this image, you will understand a little better. Okay. So this is the first stage where the traders, you can ask me which trader. I'm saying all the traders in the market who are trading, like you, me, and everyone is considered as traders. Whoever hitting the sell button or buy button during the market hours is the traders. So as for me, that is a definition here. So traders are making a decision. So what are the two decisions traders can make during the market hours? Only two decisions they can make. What is that? Either buy or a sell. That is that is the two decision where traders can take during the market hours. So you can send a buy button, you can click a sell button, right? These are the only two decisions he can make. So these decision will send the net order flow to the broker and the exchange. So let's don't complicate these things. So these order flow will hit the exchange, and that order flow creates the price movement, right? So are we trading the price movement, or are we going to trade the trader's decision? right? As per the plateau, we want to trade the reality. We don't want to trade the shadow. So this is a shadow. This is a shadow thing. This is the reality. So we are going to trade the reality, not a shadow. So we want to understand traders' decision. We want to analyze. We want to find what traders are taking the decision during the market hours. So is it possible that can we identify what traders are taking the decision? For example, I'm sitting in Chennai. Someone of you sitting in Mumbai. Someone of you sitting in Jammu Kashmir, and most of the other group people are sitting in Gujarat, Bihar, and whatever, and outside India. So do you think during the market hours can we identify those traders' decision? So can someone of you identify what decision I'm going to make by tomorrow morning at 10 o'clock when the market opens? No one can. No one can, right? No one can identify. But how we can identify the trader station? So that is where our setup come, and that is where we are going to discuss about that. So with this said, I want you to look at the chart with other traders angle, with what other traders are thinking. Why are we looking that in that angle? Because we are making the trading decision based on other traders emotion. We are taking the trading decision based on other traders decision. So that is the key component, or this is the key thing of our setup. Why we are trading because of why we are trading on other traders decision? Because we want to trade the reality, not the shadows, right? So that is why we are trading the other traders emotions and other traders decision. So this is what the market, then this is what the reality, and this is what we are going to do in next couple of in the next coming session. And this is what we are going to do, or this is what we are trading in upcoming sessions. So for this set, I'm just giving the simple example here, and I want everyone to look at this chart and tell me what happens in this chart. And you can consider this green line as a support line. And can any one of you tell me what happens during the session? So I'll get some answer. I want to get some answers to move forward. Guys, can some experienced trader can tell me?
Hello.
I don't want to push some very newbies here. If you have some experience in resistance and support line, you can directly open your mic and tell me what happens here.
Hello.
Yes, yes.
Yeah. So basically, price is opened up in the morning. It tried to go higher, and then it's been taking support at this 33,661 levels for quite some time, I think. And then suddenly at around 1 o'clock, it eventually closed below that support. And then it tried to retest, I think, that support again, where the support became resistance, and then it fell further down.
Okay. I'm not telling this is wrong, and either I'm not telling this is right. So I just want to know what your thinking or what your thought process is going on, whether when you are seeing this chart. Say, guys, any one of you come and tell me again from your point of view, because everyone point of view is different when the market is on live. Okay, so I got some reply here. Took support, broke the support, downward support become resistance, broke the resistance. Okay, not bad. I'm not saying it's wrong, because see, no one can say wrong, right in the trading, right? Because what is the reality? Reality is we are taking the decisions, we are sending the market order flows. That order flows makes the price movements. So where comes right or wrong? So I'm not saying right or wrong and all. Okay, so this is the perspective. So before this slide, what I showed you is, just a minute, guys. So I asked you guys to look at the chart in other traders' perspective, right? So that is what I shared in this in this slide before this chart. Okay, no worries, because you are new to this concept, so I'm just explaining what happened here. Okay, let's split this chart into some different pieces and then just explain here, guys. Give your concentration, give your most concentration here, because this is the key concept that based on this thing we are going to trade. Okay, so this is the point A where the market breached the support line, right? Am I right? Yes. What happened here? See, when the price breaches the green line, I mean the support line, the breakout traders or that some group of, I'm not naming the traders, I'm just telling it, some traders are entering into the market thinking that this market breaches a support line and it will go down. So they are entering this market. How they are entering? Entering by a selling order, sell orders. So the sell order creates here, right? Sell order creates here, first thing. And this is the first thing, the market goes down. And if you look back to this candle, and before the breakout happens, it took support here and market tried to move upwards, but it fails eventually. But when seeing this candle, what happened to these traders who took a long here thinking that market will go up? Because earlier it took a support here and tried to move up, but it eventually failed. Where they kept the stop loss, they kept the stop loss here, here. We don't know where exactly, but we'll assume somewhere here. See, when the market breaches a support line, new traders enter. This will create the order flow, selling order flow, market comes down. And these guys, what they will do? They went long, but after seeing this thing, they know the market is going against their position, so they want to exit. So when they buy here, they want to sell here. They sell again here. It will create the net order flow, selling order flow, and that makes the market move down, further down, right? So this is the reason the market moved further down here. And what happened to the point C after this candle forms? Some traders who entered here short, thinking that okay, this market is not going further down, because they can either think they can pin bar, or they took some support, or they can think about this is a fake breakout, or failure breakout, whatever it is, or they can say okay, this is a stop loss hunting, whatever the name they can give. But once they see this thing and they thought okay, the market is not further going down and I want to exit my position with minimum profit, right? When the people and shorted here, they want to exit here with a minimum profit. So when they short here, they will buy here. What it will create? It will create the buy order, bullish order, right? The market is going up. Once seeing this thing, what some traders will think, okay, this is going to be a fake breakout. I want to enter here and I want to capture the entire move of this thing. Some might enter here. What they will do? They will hit with the bullish order, buy order. So it will create a bullish net order flow again. So the market will go up again, right? So after reaching this point, some of these traders, they may be a scalper or they may be a very short time trader. What they did is, okay, they hit a buy button here. They want to sell here because their position is in a profit. They want to sell here at when it reaches the support line. They will think that this support line will turn as a resistance line, so I don't want to carry my position. I am selling this here in this area. That is point number D. So some of their buying position are selling here. Sell order creates. And what happens when the traders who buy here and not at all booked up losses here, they wait till this area. Once the price comes here, they will close the position with the minimal loss or the cost to cost, right? Some of these guys will do that, right? So what they will do, they will do a sell here. sell order creates. And what happened this guys? The guy who entered the short, breakout, and the market comes here and again showing some we can see some resistance over here, whatever you think. So they will enter up, they want to add more position to their trade. So what they will do? So they will enter with a sell order to adding their position, right? So this much of sell position is adding here in this particular area. So what it creates? It creates the order flow, lot of order flows. These order flows is the selling order flow is more than the buying order flow here. Okay. So what it happens? Once the market getting all these sell orders, the market is going further down, breaching all these lines and these supports or whatever you can call. It breaches everything, it's going down. Right? I want you to understand this concept well. And if you have any doubts or if you have any questions, you can ask me from here itself. Guys, if you're okay with this concept, we can move further. Does everyone understand this concept well? Hello?
Yes.
Okay, so if you have any question, you can ask me now itself, because this is how I want you to look at any chart and you want to take the trade. It may look like little difficult now, but going forward it will get used to it. You will be used to it. Your eyes will easily get used to it, understanding what happened in any chart, and you can take the decision. Okay, Angelo is asking to trade. Okay, explain again. I'll tell you, no problem, because this is the important thing I want you to understand well. I'm just erasing everything. Okay, so we'll start with the point number A. This candle breaches the support line going down. What happens is here, exactly here, the new short traders enters into the market thinking the price breaches a support line, it will go further down, maybe here, this thing or this thing. They think the market will go further down because they are thinking the market is in the range for some time and it breaks finally, it broke finally the support, the market will definitely go down. So the new short traders enter here. The net order flow, sell order flow happened, right? Okay. And think about this, guys. So these traders enter into the market thinking from this support line the price will move up because it took a supported price, right? So what they did, so they create a buy position here, and where they keep the stop loss, most of the time the intraday players will keep the stop loss like here. We don't know exactly where it is, but somewhere around here, this region, right? So this is what the retail traders are thought of. So this is what the retail trader used to, how the retail traders used to trade, right? So once the market breaches this line, the new short traders enter here, the net sell order flows creates, and all the stop losses, the most of the stop losses of this long traders hit here, and the total net order flow creates in the sell side. The market moves further down. Okay. We don't know how many orders or how many stop losses there, and we don't know how many new short traders are entered. We don't know anything about that exact number, but this is the scenario. This is how the prices moves in the chart. That is what I'm trying to come. See, at the point number C, after seeing this particular candle, what the most retail traders will do? So most of the traders will think that, okay, this market will not go further on because it's showing some bullishness over this area. So that some new traders who enter short here, they want to exit their position at this area after seeing this candle or this area, because they are thinking that the price is not going up, down, further down. So they will exit their position. Exit means what? They will buy back again, because they short here, they will buy back. If they send a buy order flow to the exchange, what will happen? It will create some bullish position. The order flow is just getting bullish, it's going up. And one more scenario. So after seeing this particular candle, the new traders thinking that, okay, this will be a fake breakout, or this is the stop loss hunting of this area, and the market is going to rally from here, so I want to catch the entire move from here. So they will create a bull position here, right? Again, they are making some buy position, so that will create the market to go further up, right? So in this thing, the market will come under the, come to the same position where the price breaks the support line, right, from this area. So this is the point number D. Let me erase the inks so that you can see very well. Okay, once the price reaches this area, what happened? See, there are 3-4 possibility for 3-4 possible trading decisions were happened. What are those things? I'll tell you how. See, the scalpers who entered here, or the short-term people who entered here, thinking the market will go up and thinking that this is a fake breakout. After seeing this particular candle, they are deciding, okay, this support line will now act as a resistance. I'm not going to hold my long position here. I want to exit here. If they are long here, they will sell their position here, right, at this area. I'm not telling this candle or this candle, but this area. That will create a sell out flow, right? And what if some traders who put a long here and they didn't keep the stop loss, and they want to exit here with a cost to cost or a minimal loss, what they will do? They long here, they want short here. They want to exit the position. What they will do? They will short here. Again, it will create the net order flow, short. And what if these short traders already they have shorted here, and they want to add more position to their trade in the same area, because the price is at the same area where they shorted before. So again, they are going to enter a short. So these creates the net order flow, selling order flow to the market, and that makes the price to move further down. And this is not about breaching the support line, or you can call me breaching support line, retracement or pullback, and it will again rejection by the support turns resistance, and it will coming down. You can name it whatever, but this is the concept I'm telling you. Guys, you are all okay? So those of you who asked the question and you understand well? Angelo?
Got it, sir.
Okay. I hope everyone understand this very well. So this is the important thing. I just want you to understand. Okay. I got now everyone is clear. Let's move to the further thing. Okay, this is the slide which I'm explained, or those concepts which I told before, and I'm just here explained in a detailed manner. Don't just see as a breakout. Don't just see as a breakout pullback. Just think about what other traders are taking decision on those areas. Think about what other traders emotions, where they feel the pain, where their position go against them, where they will book their stop loss, and where they will add their more position. So this is what I want you to think about. Why we are thinking this? Because we want to attain the final stage of finding the true knowledge, the forms, as per Plato's knowledge. Okay, so as I said earlier, is it easy to identify the trader's decision? because every one of us sitting in the different location in the planet. Some of you sitting in Gujarat, some of you sitting in Tamil Nadu, some of you sitting in Kerala, and some of the traders trade from other countries, some FII, some DII. So these guys are trading from abroad. So can we able to identify those traders' emotions or those traders' decisions in the chart? So just I'm going to the same chart again. So can we identify what traders are thinking here? Can we identify what traders are thinking here? Can we identify what traders are thinking here? No, it is very difficult because we cannot identify their emotion or their decision in the random area. We can identify their decisions and their emotion in particular levels. So before going to the setup and before going to the trade, we need to identify the levels or the zones, whatever you can call. I can often call it as zones. So we need to identify the trading zones. So these are the zones where we can identify their emotions, their behavior, their decisions. Based on that, we can take the positions. So the first thing of the setup is to identifying the trades. Okay, someone said we can identify based on market profiles. Okay, I'm not against the market profile. I'm not against volume profile. I'm not against anything. See, I'm just telling the reality of the market, what I understood for the last 5-6 years in my trading journey, and I want you to understand this. You can I'm not against you to use the market profile. If you are good at market profile, you can definitely use it. I'm not against it, but this is going to be eye opener for most of you people to trading, and you can see the chart in a different manner after this webinar. So that is what the motto of the webinar, right? Okay, so coming back to the trading zones, we need to identify the trading zone where we can enter into the trade, where we open our trade. So don't be complicated. Don't be overthink about the zone, trading zone. Okay, we need some complex indicator or a fancy indicators to identify the zone, or we need some mathematical calculation of pivot line or a Gann level, Fibonacci level. No, I'm not. See, I'm not against it, but I want you to guys move for the final stage of the true knowledge. As I told you earlier, if you see something in the chart, if your mind is thinking these in the mathematical formula or seeing some chart patterns or take your trading decision based upon that, I think most probably you are in the stage 3 between C to D. I want you guys to move to the final stage of the forms. You need to understand the reality of the market, reality of the price. I want you to trade the reality, not the shadows. That is my main intention of this webinar. Okay, coming back to here, the trading zone. Okay, just a minute. Someone has started it. Okay. Guys, let me read out all your chats once after this concept, because I don't want to interrupt this thing. Okay, coming back to this thing, we want to identify the trading zones. This is not a very complicated thing. These levels are very familiar levels of you must have heard, or some must have used in your day-to-day trading. Okay, these are our trading zones. So do you think this is complicated? Do you think identifying these levels need any fancy indicator or a mathematical formula? Do you guys need any indicator or any other thing to mark a previous day high low or previous week high low, previous month high low? No. Yeah, correct. And do you guys have any idea to mark swing pivots high or swing pivots low? Guys, do you ever hear about these concepts? I hope some might have come across this thing, but I just want to understand. Have you guys came across this swing pivots high low? Guys, this is not a pivot point, floor pivot point where you can calculate open, high, low divided by 3 and you will put some R1, S1, R2, S2, not like that. Swing pivot is different. Okay, so I guess most of you guys have no problem to identify these trading zones. Day high, low, previous day high, low. So these are a very simple thing. You open your chart, you can mark this thing. And some might you have some difficulty to identify this thing, and some might of you have heard this concept first time. So I'm just explaining these things and we'll move to the setup finally. Okay, so what are the swing pivots high and low? Swing pivot is a simply any visible turning point in the chart. So if you open your chart and you can see the any turning points in the chart that will have these two lower low and lower high forms, where you can say that is a swing pivot high and low. This is the example I'm just giving. So when during the bull run, if you see the first high point of the candle, and if you see two lower high point followed preceded by this swing high candle is called swing pivot high. Like you want this formation to happen, inverted V formation to happen in the chart. And guys, believe me, this formation will form in all of your time frame. It may be a 1 minute, 3 minute, 5 minute, 15 minute, 30 minute, 1 day, 1 month, 1 week, whatever the time frame is used. You open up your chart, you can see this kind of formation is forming. So to identify the swing pivot high, this is the two things you need to know. So any candle which makes high, which has two lower high candle before and after of the swing high, which we consider as a swing pivot. And the vice versa of this concept is a swing pivot low. You can see the low of the candle, and you want to find some higher low, two higher low point here, and you can see the V formation. So this is a swing pivot low, and we will mark this area as a trading zone. This is the trading zone. We are taking decisions here and swing pivots high and low. How to identify swing pivot high? So this is the idea. So if you're seeing this concept, or if you're seeing this kind of formation on a chart, you just identify this, and based on this formation or based on this trading zone, we'll take it trades, and I'll tell you how we can take a trade. And guys, you cannot find these kind of formation in the chart because there is a various structure of a swing pivots will form, because the formation of the structure is just an example. The market is supreme, it will not follow the textbook formation. It may be a different thing, it will form some different kind of swing high and swing low, but you want to identify the swing high and swing low. Guys, see, this is also swing high, two lower high, two lower high. This may be not actually look like a V, but still it is a swing high. And see here, some guys of you can call this as a double bottom, sorry, double top, first top, second top, but still this is a swing high. And here you can see three tops are forming. You can call as a triple top. I'm not against it, but still this is a swing high. Same line as swing low. This is actual swing low. This is a double bottom. You can call whatever it is, but still this is a swing low. This is a triple bottom, but this is still as a swing low. Clear? Guys, do you have any questions on this thing? Because this is an important area which we are marking in our chart. Based on this thing, we are taking a trading decisions. So I want you to understand this concept well. Guys, do you have any questions here? Do you have any questions of marking this swing high and swing low?
Yeah, I have a question.
Please. Yeah.
Yeah, so this swing high pivots and swing low pivots. So now if you're trading a 5-minute, you'll mark it solely on the 5-minute and not any other lower time frame or higher time frame?
No. What I said is you can see swing pivots high and swing pivots low in any time frame in the chart. Starts from a 1 minute, 2 minute, 3 minute, 5 minute, 15 minutes to 1 month chart. You open up any chart, you can see this setup.
Okay.
Okay, and you can open up any high liquidation asset class. You can see this setup is forming. If you open some any chart, you can open Reliance, you can use SBI, you can open Bitcoin, you can open E-mini, whatever the asset class you open, you can see this kind of formation is forming in all the time frames.
Okay, fine, thanks.
Okay, great. So this is the swing high and swing low marking and formation you want to mark in your chart. So now we are ready with the trading zones. Our trading zones is ready. So we can know how to identify day high low, previous day high low, previous week high low, previous month and low. And finally, you guys are get to know about how to mark swing pivots high and low. Finally, we know our trading zones. So now we are ready for the battle. So the next battle is go fight with them, get profit. Okay, so this is some example I'm putting here how to mark swing pivot high and swing pivot low. So as per our thing, what we want to know, so we want a swing low point here and two higher lows here, right? Like this, like this, like this, like this, whatever. So we want a low point here and two higher lows, right? So this will act as a swing low, swing pivot low. You can see SPL, whatever it is. This is a swing pivot low, V formation. And coming back to here, we can say this is a high and two lower highs, right? This is lower high, lower high, lower high, lower high, high. And this will act as a swing pivot high. And this is kind of inverted V formation. So as I told, so most of the swing pivots high and low will not form as the neat V formation. It might go some different way, but this is the way you want to approach the market, because market is a dynamic, market is it's not an objective thing, it's a subjective thing. So it will keep changing on every day. But you need to use to practice this thing about how to mark swing pivot low and swing pivot high, right? I hope you based on these concepts, I hope every one of you know how to mark swing pivot high and low. I'm just moving to the next sessions now. Okay, as I told, this battle is ready. So our zones are ready. So we decided where we are entering. We are deciding. We are decided the areas. We decided the zones where we are going to read or where we are going to analyze the other traders' mindset. The zones are ready. Now we are going to enter into the setups. So coming to BOF trade setup, BOF stands for a breakout failure setup. This is not a rocket science, guys. This setup is not rocket science. I'm not invented it. I'm not discovered it. This is in the in everywhere. So most of you guys have heard about this thing. This is a breakout setup. So breakout failure setup. I'm not selling the breakout. Why I am trading a breakout failure setup? See, if you are to take any chart, if you mark the trading zone, 50 out of 100 times breakout will fail. So most of the traders will trade breakout. Most of the traders will trade breakout pullback. So there is a few people who trade a breakout failure. I don't know the reason, but this is the setup which works for me for a very long time, guys. I'm saying this setup is work in all the asset class. This works in all time frame. you will see lot of setup formation in day-to-day basis. So if you want to rely on one single setup throughout your trading career and you want to make money consistently, if you ask me, suggest me the one setup, I will suggest you to trade with this setup only. Even though I'm trading with a couple of other setups, I feel very much comfortable with this setup, and because I identify these setups very quickly, I trade very comfortably. Okay, perfect. So guys, do you have any questions so far? If you don't have, we'll move to the setups now. Guys, do you have any questions?
No, sir.
Okay, Prakash. Perfect. So okay. So I request everyone to mute for a few minutes. Okay. So now we are moving to the setup. So as I said, what is a breakout failure? So as the name suggests, so this is the failure of the breakout. So this is a resistance area, this is a support area. And I hope guys you know what is this area, because we already know, we are familiar with this area. What are they? This may be a day high, this may be a previous day high, this may be a swing high, this may be a weekly high, this may be a monthly high, whatever it is. We are ready with our zone. And this may be a day low, this may be a previous day low, this may be a weekly low, monthly low, swing pivot low, whatever. So this will act as a support as long as the price is above the zone. This zone will act as a support. As long as the zone is above the price, this zone will act as a resistance. Okay. So how to identify the BOF, breakout failure? So when the price reach the resistance or our trading zone, it tries to break here and immediately it will reverse to the same zone. This is how the breakout failure occurs. This is how the setup will forms. You need to identify these setups in very quick moment. You can easily identify it. It is not very complex thing. Believe me guys, it's not a very complex thing. You can easily identify. If you understand these concepts, you can start trading from Monday. No worries. So what are the rules? Price wants to break the trading zone and it should enter the trading zone again. That's it. Very simple. Point number one. Just giving you. So consider this is a trading zone. This is also trading zone. As I said, this may be anything. Previous day high, low, whatever it is, you can call anything. The price is trading here. It is breaching to break here. It is not sustained. It immediately got reversed to this area. So that is what I mentioned here. Within the range, this is the range. This is the range. The price is showing some strength, because once the price shows some strength towards the trading area, I mean trading zone, then only it will breach. If it is showing some weakness, it will not breach. Okay. We need to consider only the breakout failure. So the price needs to break out a trading zone, and again it will return to the same zone again. We'll see some example here. Okay, so this is the example you need to see. So this is a swing pivot high and this is swing pivot low. So you can see. So what is our first condition? The price needs to breach the resistance or a support. In this example, it breaches the pivot high. We can call it as a resistance. So price is showing strength at resistance. Yeah, it is showing some strength. And at this point, what we expect the price to breach this area. And what happened in the next candle? As expected, price breaks the resistance. It tried breaks, and we are now closely watching this area. What happens? We don't know the price will come down or price will go up or price will continue to here. We don't know. but we'll wait for this candle to form. See, once this candle forms and the price return back to the same zone again, here comes our BOF setup. So this is the fine good example of BOF, breakout failure. Why breakout failure? Price breaks the resistance, it is not sustaining, it's showing weakness, immediately it returned to the zone again. Simple. Guys, do you have any questions identifying this BOF setup? So this is the qualifying the setup. You need to very good in qualifying.
Hey, what's the time frame we are using in this chart?
Do you note I didn't mention any time here or any nothing here. Do you know why?
No.
Because it will forms in any time frame. You can use it in all the time frames. I'll tell you going forward, I will tell you how it happens. Yeah, this is the time 5 minutes time frame, I know. But this will happen in all the time frames. We are seeing some more examples, and down the line you can understand it very well.
Sure.
I will show you the difference for day trading, for a scalping or positional swing trading. Everything I'll be having some example. Then down the line we are seeing that. Okay. So I want you to understand the concept. I want you to qualify the setup. Do you guys have any questions for qualifying this setup? This is easy to identify, right?
Yes, this is easy to identify.
Okay, perfect. So this is we are seeing some another example for BOF. We are qualifying the setup. Again, we are not entering the trade. We are not managing the trade now. So now we are in the second stage of BOF. So we are qualifying the setup. Okay. So guys, during this candle, what we expect? So we already marked this area. We know this is the support line. We are seeing this candle. What we expect next? We expect the price may come here, it will go directly here, or it will directly breach here and go directly down, or it will return, or it will come here and it will go here, or it will take support here, it will go directly here. So these are some formation the price will do, right? Or another thing, it will be in this like this, in this area or this area. So these are the scenarios. Only these scenarios may happen, right? Except this scenario, there is nothing can happen in the market. So once we are seeing this candle, we expect the price to breach this thing, because this is a strong movement towards the support. Price is showing strength at support. We expect price to break the support area. So as expected, price breaks the support. Now we are watching. Now we are not entering the trade. We are exactly watching what price is doing. What price is doing? Price again enter into the zone. Guys, you can call this as a pin bar. You can call this as an I'm not familiar with this candlestick names and all, and I'm not too familiar with this candlestick patterns, but you can call it anyways. But still, as long as the price is inside this area, I'm entering the trade. If the price is not in this area, instead of this, the price is somewhere around here, even though it forms a pin bar, I'm not entering, because I want the price to enter in the same region. The third point, the price is showing weakness after the breakout. Yeah, it's showing if it is a strong move, the price will move like this, or it will be like this. But it is showing some weakness here, and again it returned back to the trading area. So this is example number 2 on support. This is for resistance. I hope everyone of you clear up this thing. And now we are moving to the BOF trade management. So before entering to the entry and the target, and we are making a profit, we need to approach the trade in such a manner, right? So usually what we are doing while trade. So we identify the entry, we put the stop loss. So say for example, if you are entering at 100 rupees, we identify the stop loss at 90, and most of us know we want a risk reward should be 1:2 or 2:1, whatever you can call it. 2:1, right? Yeah. Sorry, 1:2. Risk is a 1% and the reward is a 2. So if you are entering at 100 rupees and if you are putting a stop loss at 90 and we want the price to reach 120 rupees to reach our target, and that is a sufficient, or that is a good risk to reward ratio, right? So this is what the traders are doing, right? But I say this is wrong. We are not going to approach in this way. We have a slightly different way. We have a slightly different way of approach to take the trade and manage the trade. What it is? We are identifying the stop loss first, and we are identifying the first initial target, and we identify the entry, and we will calculate the risk to reward ratio, and we'll enter into the trade. So if our risk reward is not somewhere around 1:2, we are not at all entering into the trade. Our trade approach will stop here. Before entering the trade, if the risk to reward is not minimum 1:2, we are not entering the trade. Even though the setup or zones looks very good, we are not entering the trade. Okay. So the first key point of our trade approach is to identify the stop loss. The second thing is identify the target, and we calculate the risk to reward ratio. Then only we are entering the trade. So guys, do you have any questions on this approach? Because I know most of you guys have some different approaches you have followed. I want someone of you come out and tell me what feels you better, or what do you have any questions on these approaches? Guys, I'm waiting for your answer. Hello. Okay. Okay.
Which is a good approach.
Okay. Perfect. Okay. I hope you don't have any questions right now. So now we are entering into the. Okay.
So one question.
So as per our approach, our first thing is we need to identify the stop loss and the target. Okay. So I'll tell you. Sorry.
Sir, one question. We have to take minimum risk reward 1:2, right?
Minimum is 1:2.
Okay. If it is not 1:2, then we are not going to take entry.
We are not at all going to take entry, even though if the zones are very tight, even though the zone is very good, even though our gut feeling is saying the trade is going to win for 100%, we are not entering as long as the risk to reward ratio is 1:2.
Okay.
Because for the long run, the 1:2 minimum 1:2 risk to reward ratio will help us to earn the money consistently.
Okay, sir. Okay, sir. Thanks.
Okay, great. So as per our approach, the first thing we need to identify is a stop loss. So putting a stop loss is very simple in our setup. So as you know, this is the breakout failure setup. The price breaches as a resistance, it will suddenly reverse back to the area. We are entering into the trade. Don't ask me now where we are entry is. Our entry is here or here or here or here. Don't ask me the entry now. Why? Because our approach is not entry first. Our approach is a stop loss finding approach first. So now we are finding the stop loss. See, this may be a 5 points, 10 points away from this swing high, or 5. It depends on the asset class what you are trading. So like if you are trading some for example, if you are trading some SBN, State Bank of India, I'm not sure how much it is going. Maybe if it is a 200 rupees stock, this is this high is at 202, you can keep 1 rupee or 1.5 rupee away from this area, this high. Based on this, you can keep the stop loss. This is not a very defined stop loss. This is not a objective stop loss. This is a subjective stop loss case. I need you to put a stop loss some points away from the swing high or swing low. That's it. Perfect. This is the stop loss placement. And we need to identify the target. So as per our approach, we need to identify the target first, after identifying the stop loss. So we know how to identify the stop loss, and we need to how to identify the target. So what is the target? Target is, so we need to know where the opposite net order flow will come to the market, where the next order flow will come. See, if we identify this is a stop loss, we are entering somewhere around here. I'll tell you the entry next. And where we expect the opposite, we expecting this price to go to the next area, right? But we know there may be some area the opposite order flow will come and affect our position. We need to identify where is that area where the opposite order flow will come. See here, this is a swing high. This is a swing high formation happened. This is also swing high formation happened before any, because we are in this candle, right? Guys, we are in this candle. Don't consider these candles, because we need to take entry on this candle when this candle is forming. We don't know what happened here until the trade happens, until the market goes, until the price goes. So when we are here, we are entering this area, identifying this as a stop loss. We know that we are going to be a long position here. We need to know where the short sellers will come to affect our positions. We know this is the swing high formed here, right? So in these area, most of the time the net opposite order flow will come. Most of the time, more often it will come here. Not 100%, but most of the time the opposite order flow will come. So we identify this is a first trouble area for our position. So we identify this is when price reach here, we'll book our target first. We'll book our first target, and we identify where is the next trouble area. This is our next trouble area. So we'll book our second target here, and remaining you can trial, or you can keep it open, whatever. You can move your stop loss here, or if you want to too tight, you can move your stop loss here and wait. If the market is good, the order flows are very good, and this area the market will go high. Otherwise, it will hit your trailing stop loss, and you are completely exiting from the trade. You don't have anything to lose. Likewise, in this area, we identify this as a stop loss, and we need to identify where is the next opposite order flow will come, because we are in this candle, or maybe either this candle. Once we are seeing this candle, we know we are going to enter the trade, and we need to identify where the opposite order flow will come. Can you guys see this area? This is swing low, right? This low, these two candles are high, so two candles are high. This is a swing low. I can say this is a minor swing low, but we can expect some opposite order flow will come. We do not know this order flow will take the price high, or this will be a failure and the price will suddenly go down. We do not know until the price reaches those area. But what we know is some order flow will come at this area. We can say this as a trouble area for our position. So before getting any troubles, we need to exit our position, or we will need to book our profit. So this is our first trouble area. We are booking some profit here, and we identify this as a second trouble area, and we book some profit here, and we can the remaining position we can put some trailing stop loss, or we can put whatever it may be, and we can carry the rest to the home if the price is going down in our favor. Right, guys? Do you have any questions in a target placement? Because target placement is most important in the entry point. Okay. So now you are clear with stop loss and target placements. Finally, we are going to see about the risk reward and entry. So the entry is an important thing. Why entry is an important thing is, so in the most of the cases in the business standard, what is the best entry or what is the best buy is, you need to buy at a wholesale price and you need to sell at a retail price. Correct? That is where you can earn money. That is when you can make a profit. Okay, any one recent trade you explain? Okay, I'll give you example in the chart. Opening the chart once after finishing these 2-3 slides now. Okay, so so the best entry is buying at wholesale price and selling at a retail price. That is the best entry I can say. So if you reverse this position or if you reverse this approach, you will be failed. If you buy at retail entry and if you sell at wholesale, means you will be in a loss, because wholesale price is always cheap when compared to retail price. Every one of us knows. We need to find the wholesale price. What is the wholesale price? See, we identify this as a breakout failure setup. This is a breakout failure setup. We can enter anywhere here. Do you have any problem? No, I don't have any problem entering here. But do you think this is a retail price? No, this is not a retail. Sorry, this is not a wholesale price. This is a retail prices. I am not buy anything in a retail. I want to buy the asset, I want to buy the stock, or I want to buy anything in the wholesale price. That is the cheapest price that I can ever have. So I want to find the wholesale entry, not a retail entry. This is the rule of entering. So what is the wholesale entry? How to find the wholesale? Okay, for this example, this is a breakout failure trade. You can identify. I know this is where you can keep your stop loss. In this chart we cannot see the target, but you know how to keep your targets, and this is where you need to find the entry. See, once you see this candle is closed, we need to enter into the trade. We do not wait for another 2-3 candles to confirm this bullish session. Some people are wait till this candle, the price has to close above this candle so that I can go entry. No, that is a retail entry. I'm not saying that entry is wrong, but that entry is a retail price. We want wholesale price here. Why I'm entering here itself? Because already I'm seeing a rejection here. The next candle try to breach this resistance. Immediately after this candle, the price gets rejected. So I'm entering in the midway, halfway of this candle. So do you think this is a wholesale price? Yes, it's a wholesale price. Any wrong if I enter here? There is no wrong enter here, but this is a retail price. I want to get very good price as much as I can. That is my intention. That is my entry. That is where I enter. So if I miss the entry here, suddenly the market moves here. What happens? What I will do? Do I chase the price? Never. I will never chase the price. So if you chase the price, you will hit hard and you will hurt your fingers. So don't chase the price. The market will open tomorrow. The market will give another opportunity. The market will show another setup. You will be entering next. You will find another opportunity. So don't try to enter in the retail price. Try to enter in the wholesale price. Okay, so now we are calculating the risk to reward as a final stage. See, this is some example I'm giving here. The market breached this area. Suddenly it reversed to the zone. We identify this as a breakout failure setup. We identify this as a top loss. We know this is a first trouble area. We know there is no trouble area till here. So we know this is this is a next support area where some order flow is coming. So we know our example, for example, this is stop loss to this point. If it is a 50 point, from entry to target, it should be a minimum 100 point. If it is not 100 point, we are not entering the trade. We are not at all considering to enter a trade. So if we identify this risk reward is minimum 1:2, we are entering. If it is not, we are not entering the trade. This is the must follow rule, guys. Don't miss this. Don't forget this thing. So if these conditions satisfied, we are entering the trade. Right? Where we are entering, we need to enter at wholesale price at this area. I'm not telling the candle close this candle close high, this candle low. No. You can easily identify your wholesale price. If you're, as long as if you're good at identifying the setup, qualifying the setup, if you're seeing the good risk reward ratio, you can enter. You don't want to ask me, I want to enter the close of the candle, or I want to wait for this candle to close above this, below this. No, you can easily identify this. When you look at the chart, you can easily identify this. So this is the risk reward ratio, and you are entering the trade. So guys, do you have any questions so far? We are now quickly moving to the next thing, showing the different trading zone setups here. Any questions so far, guys?
No, sir.
Okay, perfect.
I have a question again about the entry.
Sorry?
I have a question about the entry. I just wanted to clarify. So the entries were based out of if price reaches either the swing pivot low or the swing pivot high, that's where we take an entry, right? We don't wait on the candle to form a green or a red or a close, nothing like that.
Okay, I'm okay. The signal is little weak, so I'm just getting your voice now. Okay, so I don't want you to wait for the candle to close here. See, for example, if this candle is forming, right? See, if you take this chart is a 5 minutes candle. If this candle close at here, what you will do? You will not take a trade, right? But what happens is, what happen if you get some entry over this area and your stop loss is here, and you can have a target of here. I want you to take an entry, or you to buy here or sell here. You need to enter into the trade at this area. See, maybe for this particular example, just a minute, I'm just erasing. Okay, in this particular example, this candle is closed here, right? So do you think entering here and keeping the stop loss here, and your target is here, this will make the risk reward is 1:2? No, certainly not. So that's why I told you, you want to define your risk reward entering. You can put a limit order here, somewhere around here, and takes your fills your trade. Okay, you are good. If the market moves suddenly from here, no problem. You can still consider you are missing the trade. The price is moving out. I want you to enter at the wholesale price. That is the price. So identifying the wholesale price is when you are seeing the chart for multiple times, and if you have a lot of screen time you are spending in the chart, you will easily identifying the wholesale entry, not the retail entry. So again, guys, the market is again it is not an objective thing. It's a subjective thing. So I'm not putting any hard rules here to you to follow. Right? You understand? Hope this answered your question.
Yeah, so basically, if once the breakout failure trade has formed, only then we'll take an entry to see if price will retest that wholesale level technically. If we miss it, it's okay, but if it tries to retest, that's where we take the entry. Is that correct?
Yeah, in your case, you're saying it is a retesting or whatever you can call, but yeah, that's what I'm saying. So as long as you're getting the very cheap price or a very good entry, you can take the trade. See,
Okay.
what happens when the candle, for example, for this candle, if it comes here and it will trade come here, and again it will try to breaks here and it close very next below to the resistance area. So do you think this is a very good entry than this? Yes, right?
Yes.
Yeah. Now you are entering here. You are keeping your stop loss here.
Okay.
And again your target will be here, same.
Fine.
So my intention is I want you to take the wholesale entry. Why I'm stressing this wholesale entry is not objective thing, it's a subjective thing. You will get to know once you are used to practice this setup or this method. If you're seeing some more, if you're spending some more time in a chart, you will easily identify. Okay. Okay, I'm moving to the some quick examples here. So this is swing pivot high and low. Yeah. So when it happened, I think this is someone of you asked to show you the recent example. So this is a recent. I think it's August 5. See, the trade happens on August 9th. So this is in a Bank Nifty. See, for a intraday position, I know you guys can easily mark previous day high, weekly high low, monthly high low. It will not change in any of your chart. But the only thing it is changing is swing pivots. See, you can draw swing pivots high low in a 30 minutes chart, 5 minutes charts, 1 minute chart. But if you want to trade in an intraday basis, where do you want to draw in swing high and low? I want you to draw in a 30 minutes chart, and I want you to take entry in a 5 minute chart. So this is for only swing pivots. Any question for this? I'll tell you. I'll explain you how to mark, and I'll tell you how to enter the trade.
Sorry, can you repeat that again?
Okay, so if you are doing a day trading, if you are an intraday trader, if you are trading, if you are taking trades an intraday basis, I want you to mark swing pivot high and low in a 30 minutes chart. For example, I was trading on. I want to trade on 9th, August 9th here, right? August 9th, I want to trade here. Before August 9th, I put Nifty Bank in a 30 minutes chart. I'm just drawing here. See, this is 6th, 7th, 8th is on holiday, 9th is an 9th market open here. I mean here. I think here, yeah. This is the market open level. So before that, I want to mark swing high and swing low. I want to open a chart in a 30 minutes. I identify those areas. So this is the swing low, right? And this is the swing high. Perfect. Guys, do you have any questions on marking swing high in a higher time frame?
No.
Okay, so you identify the swing high low in a 30 minutes time frame. No, understood. Okay, which means you understood, right? Okay, so I'll explain again. So Okay, so you just open your 30 minutes time slots in Nifty or Bank Nifty, or usually I trade on Bank Nifty and Nifty. That is why that is the reason why I'm putting all these charts. But I tell you, if you, as long as there is a very good volumes and the good liquidation, you can use this concept in any of your chart. You just mark previous day swing high low. No, that is not a previous day high swing high, because I'm trading on 9th. Previous day high swing high is this and this. I didn't mark that one, right? Why? Because the major swing is here. This is swing high. Sorry, this is swing low and this is swing high. This has happened inside this area. I want the price to test these levels, not this levels, because most of the time I don't want this to happen, because this will be a stronger than this one. So I mark 30 minutes here low and 30 minutes high as and swing high, and this is follow here. And what happened is market opened on 9th, it started rallying. So as per our setup, what we are expecting, the price tried to breach the area. Yes, it breaches. Immediately it reversed to the same area. So we identify this as a stop loss. We need to enter somewhere around here, this region. Even though if the price closed here, I want you to enter, guys, in these area, because here you will get some very good price, because it is not there is no wrong in entering here. But if you are entering here, where you keep your stop loss, this is your stop loss. Your stop loss is very big. And where is your target? This is target. I think this will be 1:1. This will not sufficient, so we need at least 1:2. So that is the reason why we are entering here. And we are keeping this as the first target. It is easily breached. Guys, any doubts in this setup? Any guys in this? Any doubts in this example?
Sir, one question.
So yeah.
Sir, suppose we take entry, and after taking an entry, means candle turn out to be green, means it closed beyond the resistance. Then what should we do? We should hold or means exit immediately.
So I think this will help you out. So if you see this area, the market tried to breach this area. It is not happened. It is not breached. What happened? The next candle, immediately it will fell down, right? And your question is about this candle, right?
Yes.
Yeah. Okay. So for this example, I'll tell you. So the first one is a failure trade. I accept this, because sometimes the failure has happened. Most of the time it will not happen, but sometimes here, see, the market tried to breach here, but it did not happen. Immediately the price got rejected here.
Yes, sir.
Where we are entering, we are not at all entering here, and we are not at all trying to enter somewhere around here. We try to get wholesale price somewhere around near to this area. So we put some limit order here, and the limit order fills here. And once the order fills, we actually kept the stop loss here. We immediately the stop loss hit, right?
Yes.
Yes. Trade 1 is failed. Trade 1 failed. This trade is failed. So how many points do you think? So I think this is around 36080, and our stop loss will be maximum. Our stop loss will be a 40 points in a Bank Nifty.
Okay.
The first trade is failed. 40 points failed. Again, what happens is the market is tried to breach this thing, and again it is not sustained here. Again, the market entered to the same area. Again, the setup is correct. So again, we are not entering here. So if we enter here, where we keep the stop loss, this is our stop loss. So this is big stop loss, right? So we are not entering the trade. So instead of that, we will put the limit order at below this area, below this line, below this resistance. We'll put some limit order here, and we'll wait for the order to fill. Once it fills, our stop loss is here. We'll wait for this. Even though this candle is open above, close above this region, we know for sure either it will hit the stop loss and it will hit, or it will go for the target. Because the market tried to breach the resistance 2 times, it will not happen. It comes to this area. We have a more probability of price to reach our target. So if the trade 1 fails in the very next candle, if still the market gives you to enter the second opportunity to re-enter, you don't hesitate to wait, you can enter the trade.
Okay, sir. Okay. Yeah.
So this is what you want to mark in a swing pivots. And I think some of you asked about how many days previous day you want to enter the trade. Just a minute, I'm opening the chart. How many days high low you mark? Should you always wait for? Okay. See, I'm not marking the high lows. Actually, this is the high of the day and this is the low of the day, and I'm not marking the high. I just marked about the swing pivot high and swing pivot low. So this is a trade setup for swing pivots. And if you ask me how to trade with previous day high low, here the example. So these yellow lines are previous day high and low. Is okay. And I think this is an example of July 26 and July 27. Okay, so guys, this is the previous day high low. Market opens here. What happens? It tried to breach us, it will not. We enter here and we kept the stop loss here. This is our target first. Our first entry failed. What happens immediately next? The second time market, the price tried to breach the previous day high. It will not happen immediately. The price reversed to this area. We are entering here. We keep the stop loss here. Our first target is here, and our second target is somewhere here. But the market is only achieve the first target. Okay, fine. Even this is the 50 points loss. We can achieve the 100 points here in the second trade. And coming to the next day, the first candle itself, it breaches and it will not happen. It will immediately sustain. It reverses to the zone. You will keep the stop loss here. You enter somewhere around near to this area, and you will keep your target is day low here. Because why the day low? Because there is a gap up is happening on that day. So you will keep this as a target 1, and it achieved. And again the market tried to breach the second time. It will not happen. It will again return to the our trading zone. You enter here. You'll keep your stop loss here. The first target is here, and the second target is here. Why here? You can see some swing low happens in previous day in this area. You can exit here. And for you to trade in intraday for previous day high low and swing high low, I need you to keep a 5 minutes time frame. That will be good for you to trade. Okay, this is for PDH and PDL. And for to trade and swing trading, and if you want to trade for weeks time, I want you to consider a weekly high low as a trading zone, and I want you to keep 30 minutes as a trading time frame. See here. So this is the previous week low. The market open here. It tried to breach us down. It will not happen. It entered to this area. We are entering here, keeping the stop loss here. The market rally for 2 days, and we know this is our first target. It reached here. We booked our target here, and we bring this stop loss somewhere around here or here. And at the end of the day, our position is an all deep green, not in a red. So for weekly high low, you will keep the 30 minutes time frame, you can use it. For a positional trading, for a monthly high and low, you can use 3 hours time slot. If you ask me why 3 hours, I don't have a specific or exact answer to this, because I trade 3 hours for in positional trading for a very long time. It gives very good entry for me, and I don't think most of the guys are trading in 3 hours time frame, but you can try considering trade 3 hours for a monthly levels. And this is for July, the last July. See, the very good trade happened. Only one trade happened here. See, the market trade from this region for July 1 to July 18th. The 19th, the market tried to breach monthly high. It will not sustain there. It will immediately come back here. Even though the price closed below this line, my entry is very, very close to the monthly high. I put some limit order here. The market fills. I put stop loss here. You can see immediately on the next 2 days, the market go down for, I think it was an 1,000-point rally in next 2-3 days. So I captured entire. So what was my stop loss? The stop loss was very, very low. If you ask me for the positional trading, 300 points stop loss isn't very low in a bank nifty. So this trade I got actually around 1:2, 3.5 ratio risk reward in last month in the positional trading. So this is a very simple setup you can follow. You can trade from the Monday. You don't need to think about anything. You just need to understand about what other traders are thinking. Based on that, you're taking the trade. No rocket science here. So I guess I'm just giving the summary of the setup. Please,
in the previous slide, once the breakout fails, then you take an entry. In this one, the entry that you showed is the big red candle.
Yes. No, that is not my entry.
No, that's not your entry, right? The smaller green candle is your entry.
This is the qualification. This is the
Yes.
Once after seeing this red candle, I qualified this as an BOF setup. You understand? But I did not enter the trade. I qualified the setup. See, I'll go by one by one. This is the monthly high. I have my levels first. I know my level, and the market tried to break out this level, and it will not happen. The price returned to this below my level. So this qualifies as a breakout failure setup, right? So this candle qualifies the BOF. Even though this candle will close at here also, this is a BOF setup. But I will not enter here because my stop loss is here. My first target is here. When you calculate the risk reward ratio, it is 1:1. You will not get a very good risk reward, so you will not enter here. But I qualified this as, after seeing this red candle, I know definitely this is a BOF setup. BOF setup formed. So I want to enter into the trade. So what is our approach? We need to identify the stop loss first. We need to identify the target second. Both are done. Perfect. Okay. Now I calculating the risk reward. If it is an 50 point, you can consider this is at 100 points. For example, if it's 100 point stop loss, I need at least 200 points target, right? So that is what it qualifies for the entry. Otherwise, no entry. So if you enter here, you will not get 200 points. You need to enter it here. Then only you will get 200 points.
Got it.
So I want you to enter somewhere around this area, because that will make sure to it will keep your risk reward very handy for 1:2 reward, minimum 1:2.
Got it.
Even though I booked a profit here, I'm not seeing this region. I already marked my target first. I booked 50% of my position at this area, and I bring down my stop loss to this area. I don't know market will hit my stop loss or it will go further down. I don't know. No one knows market will go down or go up. But we are managing the trade. because already I'm in a very good profit. I don't want to keep the stop loss here, so I'll just bring the stop loss here. Even though if it is hit my stop loss, still I'm in a very good position profit. But the market again, it goes down. I booked another 23% here, and I kept remaining here. I put trading stop loss at above this area, and it will hit in the next candle. But it's okay. 25% of my position hit the trailing stop loss, but I'm still happy because I still follow the setup. I still follow my approach. I still follow my trading setup. So is this enough for trade a positional trade? You need one trade in a month. So there is no rocket science finding this. See, this is not a very bold example. This is a last month example, July. So this is August, this is July. You can open your chart. You can see these levels. Okay, so I'm just briefing. We are moving about our time. So it's 6:45. So I'm just briefing about a summary of the setup. The first thing is we need to enter. We need to mark the trading zone. The trading zone might be day high or low, previous day high low, monthly high low, weekly high low, whatever it is. But guys, please note, you should not trade with 5 minutes time slots in a weekly high or low, monthly high or low. Okay, that will not help you. You should keep the time frame for each and every setup. If you are using a swing pivot for 30 minutes, you need to trade with 5-minute time frame. If you are using a day high low or previous day high low, you should trade with the 5 minutes. If you are using the weekly levels, you should at least you should use 30 minutes. If you are using the monthly levels, at least you should use 3 hours. Going above 3 hours is fine, but going below 3 hours is making trouble, because the signal will be not correct. So please note this point very clear. So the summary is, you should mark your trading zone and you wait for the setup to form. You should qualify the trade setup. For this example, this red candle forms here. This qualifies a BOF setup. So I want you guys to wait for some setup to form. Setup formed, and what's the next point? You need to identify the stop loss, target, and if you are calculating the risk reward is very good, you enter the trade. Otherwise, no trade. Keep your hands tight. Don't trade. Market will give another opportunity. And wait for the wholesale entry price. Push your buy button or sell button. You sit back and manage the trade. Nothing else. Can I see any questions here? Should you always wait for? I'm sorry. Please go ahead. Someone asked some question?
Yes, sir. One thing I want to ask means, when we are trading in intraday, means on 5-minute time frame, do we have to keep 30-minute chart as well in front of our screen? Means
no.
You
don't want to keep 30 minutes time chart in front of you for trading intraday, because you just need to mark your swing level, swing high and low in a 30 minutes slot, and you just wait. That's it.
Okay. Means I have to just before market, I have to mark level and turn to 5-minute time frame and trade.
5 minutes. That's it. Clear. Because that level will not change, right? If you mark a horizontal line and if you lock that line, it will not change. If you go for a 1-minute time frame, also it will not change. So that level is why that level you are marking is, you are waiting for the price to act something in those area. You wait for the other traders to take decisions. Based on their decisions, we are taking our positions.
Yes, sir.
Simple.
Yes, sir.
So again, this is a summary, guys. So see, I have some few chats asking some questions. I'll clear them. Also, how many should you always wait for breach? Yes, Keith, you need to wait for price to breach. because that is the point number one. Price needs to breach either support or resistance, and it should show some weakness after the breach, and it should return back to the trading area, which means below resistance or above support. Then only you can trade. Yeah, you need to wait for breach and wait for the setup to form. So how to find an entry in option compared to index? Same or different? So options, how to find entry in option? See guys, option trading is a bit complicated. I will tell you. See, I will also trade options here using this method. Usually what I will do is, see, for example, this example, I'll give you this example here. Okay. See, for this example, see here, after seeing this setup, I thought I bought 35,900 put in a week, I know, in a monthly option. See, I got somewhere around 200 or 250. I certainly forget the trade. See, when close of this candle, 35,900 put option cost is somewhere around 250. Consider it is a 250, but I'm not entering a 250. I put limit order for a 200 and wait for 200 to get filled. But most of the time you will get a cheap price. That is a wholesale entry. I will not take 250 as my entry. I will wait for a minimum price to fill. I will try to see a chart, and I will try to come up with some numbers to get the wholesale entry. See, for example, if it is a 250, I'll get it for around 210 or 200. So based on that, you can calculate. Pratish, I hope this answered your question. Okay, great. So this is a summary of the setup. You can, if you want, you can take some screenshot or whatever you can think. You can use it. You can paste it in front of your screen. So if everything is, if all the points are correct, if all the points are marked to tick, you can go ahead and take the entry. Otherwise, no trade, wait for other opportunity. No trade, wait for other opportunity. Your patience will definitely pay. See, if you ask me why this setups works, this setup will work for a long time, or it looks like an easy setup. Will this work? Because I don't see any indicators. I'm not seeing any mathematical formula. I'm not seeing anything. If you, I know some of you guys have some questions like this. If you ask me, I'm trading this setup for last 5.5 years. I'm saying this is one of my favorite setup. I'm seeing day in, day out, even for scalping, intraday, positional, swing trade, whatever you ask, I trade this for a long time. And if you don't believe me, this is the word from the master himself. So he's a Landsbeck. He's one of the legendary traders from Australia. My mentor was trained under Landsbeck sometime back in 2005. So I got some very good knowledge from my mentor, so who is in Gulf. So this is what some text we shared a couple of weeks before with the Landsbeck. So as the Landsbeck said, BOF can offer exceptional risk to reward ratio. So you can if you want, if you ask, you don't want to, you don't trust me blindly, but you can analyze your chart. You can analyze, open your chart and analyze, and what other traders are thinking. And again, I want you guys to be in the fourth stage of discovering your true knowledge, not in somewhere in the first or third. Even the third stage is quite good, and I want you guys to move to the last stage of the finding the true knowledge and get best benefit out of a trading area. So as I said, this is the you can definitely believe in the BOF setup. You can use it from tomorrow. If you have any doubts or if you want any support, you can certainly text back to me. You can follow me in Twitter. You can just DM me, or if you still have any um, uh, if you still want my swift reply, if you want my immediate reply, you can send me some messages to my Telegram. Same as Simple Trader 66 is my Telegram. You can just join this link. You can definitely get benefit out of it. Yeah.
So one thing I want to ask.
Yeah, please go ahead.
Sir, can you please put some light on how to do scalping on BOF setup?
Okay. Okay.
I too have a question. I'll ask after this answer.
Sorry, could you repeat that?
I too have a question. I'll ask after this answer.
Okay. See, see guys, I'm a little bit lazy guys, so I have just coded my indicators, even though I'm not fan of fancy indicators, but due to my laziness, I want these indicator to mark these our levels. Like it will mark previous day high, previous day low, previous week high, monthly high, low. So this will automatically mark. So that is why I coded this indicator. And again, I will also not good at seeing a swing high, and because of my laziness, not a very big thing. So I coded this indicator. This will show a swing high, swing low, but I will not blindly follow this swing high, swing low, but it will actually show me where is swing high and swing low formed. Based on that, I will also interrogate the market and I will mark accordingly. So, and coming to the scalping thing, I will keep 5 minutes to identify the swing high and swing low. Okay, so this is what's where it happened. Okay, so we need to identify the swing high and swing low in 5 minutes sample. Okay, you can take this as an example. So I'm just marking this is a swing high, right? Yeah, no, okay, so somewhere this is a swing high. As I said, not all the swing high will form one swing high and two things. See, this is a very good example. See, all of these three candles are in the same region, but still this is a swing high. And I'm marking this as a swing high, swing low. This is swing low, yeah, and this is swing high. Okay, this is swing high and swing low, and we are trading after this candle. So I'll go 1 minute. Okay, we identify this as a swing high and the swing low. Okay, guys, there is no setup formed here. So do you think there is any setup formed here? Someone asked about the scalping thing. So do you think any setup formed here?
Yes, sir. I asked about scalping.
So scalping is you want to identify the swing high and swing low in a very lower time frame. For example, you can identify in 5 minute time frame, and you can switch back to 1 minute time frame for a trading.
Okay.
See, I'm just trying to see where BOF setup formed, because there is a lot of setup is forming, right? Not only BOF setup is forming in all the chart. See, if you mark this region, I'm just trying to find where BOF formed in. Okay, I think this is a good example. This is swing low. Do you agree this is swing low in 5 minutes?
Yeah.
Okay. So we identify the swing low in 5 minutes, and just I'm marking this as a starting point. Okay, I'm just switching back to 1 minute candle here. So here we identify the swing low, right? In the 5 minutes. The market is trading in a 1 minute time frame, and it tried to breach us this line. And you can see it will again it come back to the this area, but I don't say this is a perfect BOF setup, because the price traded so many time in this area. We want the price to breach this area, and immediately it will come to immediately return back to the zone. Then only it considers a BOF. I don't think this is a BOF.
Okay, sir.
Okay, but the concept is, if you want to scalp, you just mark your zone in a 5 minute and switch back to 1 minute. You can find the setup.
Okay, so then also we have to keep our risk reward to 1 jump to, right?
You see, no matter what time frame you're using 1 minute or using one month, you should keep always 1:2 risk reward ratio. If it is not, please don't trade. Or you see here I can see the okay, this is a 5 minute. No, I'm sorry, this is not a good setup. See, you can easily identify setup. See, I'm not a scalper day to day. I couldn't find the setup, but if you want to do a scalping, you just need to mark your swing high low in a 5 minutes time slot and switch back your trading time to 1 minute.
Okay, sir. Okay.
And you need to follow these rules. Without these rules, there is no trade. Take a printout and stick in front of you in your trading monitor.
Okay, sir. Okay.
Guys, I hope you guys have some good session. If you have any question, you can ask me and we can wind up the session.
On your Twitter profile on 11th of August, you shared a 5 minute buy sell order, your entry, your stop loss, and your target.
See, on what date? Could you?
11th of August. Yep.
11th of August. Okay, I'm just closing this. Okay, 11th. 11th, yeah, this 11th. Yeah, please tell me.
You bought. This is for BNF, not for Nifty.
Oh, Bank Nifty. Okay.
Yes.
Okay. Yeah. What's your question?
You bought 35,700 call and sold at a higher rate. So my question was, as per weekly, the swing low was 35,400 as per the chart.
Okay.
So I'm just getting confused whether 35,600 was the swing low you considered or 35,400 as the swing low that you considered.
You don't get confused about choosing the strike price. Okay.
No, I'm not getting confused about choosing the strike price. If you consider a 30-minute BNF chart.
Okay. 30 minutes, August 11. Yeah.
Yes. So you have considered 35,600 as swing low and not 35,400, right?
So as far as this chart, see, on 11th of August, I don't know, this is a swing low. So as far as this thing, so before 11th, I will keep this as a swing low.
Okay.
See, I cannot know during the 11th, right? So once after this candle forms, I can tell this is a swing low. So
the
before
one on
this,
9, how about that? Would you, ignore that after the 10th August candle?
Could you repeat? What's the question is?
On
So did I mark correctly, right? This is the mark I think I marked.
On 9th of August, the low was say about 35,600 only, a little above that. And the one that you have marked on your charts is of 10th of August.
See, I'm still not able to get your question.
Which is the recent swing that we have considered for the 11th of August trade? I wanted to know that.
For the 11th August trade, right?
Yes, you took a trade on 11th August. I wanted to know which was the swing low that you have considered.
See, this is a swing low on 9th of August, and it will not breach on 10th of August. Okay. And this is the recent swing high. Okay. See, as soon as market opens here on 11th, I will wait for something to happen on this area.
Okay.
Either this or this area. Something happened in this area, and based on this, I took a trade.
Okay. Okay.
See,
got it.
See, now you should make sure that I'm not only trading only a BOF setup. I have another 4 setups that I'm trading in a disciplined manner. Not only BOF setup. BOF setup is one of my favorite, but still I'm using another 4 setups.
Okay. Okay.
Okay, because market, I cannot wait for a BOF setup to form in all the chart, right? It will kill me. Because I'm trading these setups for last 4 or 5 years. So I used to trade up. I come up with some 5 setups. So BOF is one among them.
Got it.
Okay. I
Thank
think
you.
if you have any question, guys, you may ask, or we can wind up the session. And I'm happy to help you out. You can either send me a message or email. Email is also same. simpletraders66@gmail, or you can send me a request. This open public Telegram group for you, and you can send me, and I will post some setups is formed, or we can mutually get benefit out of it. And also, if you want to know about the more things, and if you want these indicators, if you are lazy like me, if you want these indicators, you can send me a message, and we can discuss more about these things. And if you want any help you out, and if you want anything, any doubts, you can don't hesitate to ask me. You can send me a message anytime. I'll try to give maximum input I can. Okay.
I got one question. Your Telegram is not an open forum. I mean, it's not an open thing because it's saying. I don't know.
It is not open. I don't know, because I just opened 2 days back. When is August 13th I created. I didn't. Okay, I think it is open. I have to subscribe. I have tested something. It is all open, right?
Okay, because it's showing me closed. That's why I asked.
See, this is the. Just a minute. Simple Trader 66 is the channel name. You can open. You can try open this. You can also see this logo. My logo here.
Yes, I'm showing it, but it's not showing me open as of now. Maybe later I'll try it again and see that.
No problem. You can open it anytime. Okay.
Okay. Thank you.
Guys, I'm okay. I'm done with my end. So if you have any questions, let me check the chat quickly. If anyone send me a message, thanks for the webinar. For intraday pivot, high level is marked on 30 minutes. Entry to be taken at 5 minutes. Yes, Angela. Yes, you want to mark pivot high in 30 minutes. Entry to be taken at 5 minutes. Yes. Makes sense. No, I don't know questions. Okay. Okay, Angelo, you just joined. Okay.
Okay, this is the group that is open, correct?
This is for Chat, I think. Okay, let me also check because I'm also new to Telegram. I'm not used to it. I'm not used to it. This is the first time I'm opening up and I'm seeing this. See, I have created this thing on August 13, 2 days back. See, this is the channel, and I have put some discussion channel also. But some might have seen 5 members also. Can see 2 members. I'm just sending. Test here. Okay. Yeah. Yes, guys. Yeah, I think. Yes. Now I can see the subscriber list is getting growing. Yeah. I think Lucky, CA student Angelo. So this is for discussion. Okay. Perfect. And guys, one more thing I want you to do. So I hope this webinar shows some different way of looking at the market and show some good setup you to trade from tomorrow. So if you have any feedback, you can write down here, or you can send me a WhatsApp, sorry, a Twitter message, or you can send me a Gmail or something I can expect from you, because that will motivate me to work on further thing. Okay. Guys, okay. This is the chat, Lucky. This is a chat group. Already you are a member of Simple Trader channel. Okay, guys, I'm done with my webinar. If you have any questions, you can ask, or otherwise we can wind up the meeting. So I think this is the first time in my my career I'm just taking more time than expected. I thought I'll finish this webinar in at 6:30, but it took 45 minutes more. But I'm happy to do. I'm happy to give some answers for your questions. So that is the most important thing. Okay, Lucky. Always pleasure is mine. See, knowledge is for sharing. See, identifying the knowledge is most important. Identifying the real knowledge. Stage 4. So, guys, I will send you some information about this thing, and you can go search for it. Okay, that is. This will be a really interesting one. We will get recording. I don't think I'm sending the recording for this thing, because but still, if you want, you can ask me. If you want, I can guide you. No worries. Don't hesitate to disturb me at any time. And one more thing, if you are seeing the recorded webinar, you will get irritated, man, for sure, because lot of noises and lot of loose talk and lot of unwanted stuffs. You will not get some clear picture. That is my perspective. I don't know about you. No worries, no worries. See, as long as you are learning, you are a learner. There is no slow, there is no quick. You just send me a message anytime. Okay, I will be helping you. No problem. Oh, thank you, Lucky Singh. Okay, guys, I don't want to keep long time on your Sunday evening. I better leaving now. So you had a great evening or a great night, and you can start your trading from tomorrow. You'll see your chart in a different manner. So, and also I'm just giving quick thing as a giveaway. So don't forget this. This is the most important. This is the most important thing you need to follow. How to copy this slide? Copy. Throw in front of your desk. This is the most important thing, guys. Okay, I'm done. I hope everyone get benefit out of it. And again, I'm just asking you to write feedback to me, maybe in our Telegram or in our Twitter. If you have any queries also, you can just let me know. We can discuss it later. Thank you, guys. I'm just ending this meeting. See you soon. Bye bye. Bye everyone. Bye Lucky. Bye.
Thank you so much for your time, sir. Thank you so much.
Bye. Thank you. Bye.
Bye.
Yes, bye.